Good to have you here. Today I want to show you how I think about a stock before I put real money into it. And more importantly, I want to show you that I've already done it. I bought Zeta Global on June 30th, 5.1 shares at $19.61. That's pick number 2 in the $1,000 portfolio challenge. So what made me pull the trigger? And should you be paying attention to this company? Let's walk through it together. Quick reminder, everything here is for education and entertainment, not financial advice. This is my own real money experiment. I'm not a licensed advisor, so do your own research before making any investment decisions. Zeta came up on my TipRanks screen. I filter for smart score 8 or above, top analyst consensus of strong buy, and meaningful price target upside. Zeta hit all three, smart score 10, the maximum. 4 of the best performing analysts who rated this stock in the past 3 months all say buy. Not one hold, not one sell. And the average price target is $32.50 against a purchase price of $19.61. That's 65% upside if they are right. But before I spend hours on research, I run a second check. I use Simply Wall St Snowflake score. 2 numbers act as a veto for me, financial health and future growth. If either scores 2 out of 6 or below, I stop no matter how good the TipRanks data looks. Zeta didn't just pass. Financial health came in at perfect 6 out of 6. Simply Wall Street calls it a flawless balance sheet. Future growth scored 5 out of 6, both well above the veto line. Past performance scored 0 out of 6, and I want to be honest about that. The company is still reporting GAAP losses, but the trend is improving sharply, and 2026 is guided as the first year of full GAAP profitability. Both lenses passed, so I went deeper. So what does Zeta actually do? In plain English, it's an AI-powered marketing cloud, one platform that helps large enterprises find, target, and retain customers. At the heart of it is something that took 20 years to build, a database of 245 million US consumer profiles. Banks, retailers, car brands, telecoms, Zeta helps them all figure out who to reach with what message at the right moment. Their clients include 40% of the Fortune 100, American Express, Verizon, Samsung, BMW. These are not small experiments. These are major corporations making a deliberate choice. Now, why can't a competitor just build the same thing? That's the moat question. And for Zeta, I see 4 layers. First, the data. 245 million profiles built over 20 years. A startup cannot replicate that regardless of how much money they raise. Second, Athena, their AI layer that sits directly on top of that data. Anyone can license open AI models. Not everyone has the data underneath that makes those models genuinely powerful. Third, the OpenAI partnership itself keeps Athena at the cutting edge. And fourth, Athena recently expanded to advertising agencies, so the moat isn't just deep, it's getting wider. Now let's look at the growth picture, because this is what analysts are pricing into that 65% upside target. Revenue guidance for 2026 is $1.785 billion, representing 37% growth year over year. But what I find more compelling than the top line number is what's happening at the customer level. The sales pipeline is up 40% year over year. One Fortune 100 telecom client is expected to grow their spend with Zeta 19 times in 2026 versus 2025. That's not a renewal, that's a transformation. And the Palantir partnership announced in June, a 7-year deal could drive over $100 million in additional annual revenue. Commercial focus only, not government or defense. Athena's early traction is also striking. In the first week of general availability, it drove a 7 times increase in agentic interactions and accounted for 60% of all AI usage on the platform. A global apparel retailer consolidated 4 vendors down to Zeta alone after adopting Athena. And perhaps the most reassuring number, 19 consecutive quarters of beating and raising their own guidance. Nearly 5 straight years. That tells you management has genuine visibility into their business. I want to be honest with you because that's what due diligence desk is about. Zeta has real risks, and I'm not going to gloss over them. The biggest one is the Culper Research short report from November 2024. A short seller firm alleged that Zeta used so-called consent farms, websites designed to trick people into providing personal data. They also raised questions about revenue quality. Zeta denied everything firmly and in detail. The stock fell 37% in a single day. A securities class action lawsuit followed and is still active. Their business continued to grow through all of this, but institutional trust hasn't fully recovered. Second, GAAP profitability. Zeta is still posting GAAP losses even as the trend improves sharply. 2026 is guided as the inflection year, but it's guided, not yet delivered. Free cash flow is strong, around $200 million, so the cash is real. But GAAP consistency still needs to be proven. Third, Athena. The growth thesis relies significantly on Athena delivering at scale. Early adoption numbers are compelling, but management has been conservative. Current guidance contains minimal Athena revenue contribution. It's still in demos and usage, not yet in booked revenue at scale. And fourth, partner concentration. 3 deep long-term dependencies on OpenAI, Palantir, and Snowflake. If any of those relationships shift, the story changes. These are the reasons I keep any individual stock position small. The final question I always ask, who is running this company and can I trust them? David Steinberg co-founded Zeta and has been at the helm for nearly 20 years. He founded 7 companies over 30 years, taken 2 public and sold 4. He co-founded Zeta alongside John Scully, the former CEO of both Apple and Pepsi, who served as vice chairman until retiring earlier this year. David Steinberg's previous company, Infonic, filed for bankruptcy in 2007. That is public record and worth mentioning. But what I find more interesting is what he did with it. He has spoken openly about the lessons, unit economics, building sustainably, understanding the difference between revenue growth and business health, and then he built Zeta on exactly those principles. What I've read and from observing people who succeed in life, failure is often the best teacher. Those who go through it, learn from it, and come back stronger make better decisions the second time round. And the numbers back that up. 19 consecutive quarters of beating and raising guidance is not luck. That is a CEO who understands his business. He also owns 9.72% of the company, approximately $459 million in Zeta equity. He's not walking away. His wealth rises and falls with every shareholder. Let's check in on the portfolio. We have 2 positions open. Pick number 1, NVDA, bought at $200, 4 cents per share, 0.4999 shares, $99.99 invested, still holding. Smart score remains above our methodology floor of 8, thesis intact. Pick number 2, Zeta Global, just added this week, bought at $19.61 per share, 5.1 shares, $100, 2 cents invested. That's 2 of our 10 positions filled, approximately $200 deployed, approximately $800 remaining. Pick number 3 is coming in the next few weeks. Same process, same 2-lens screen. As I always say, stock picking is more like a sport. There's an element of excitement in it, there's also an element of luck. So make sure you're only using a small portion of your total assets for this kind of investing. Don't lose sleep over it. If you found this useful, subscribe so you don't miss pick number 3. Hit the like button if the breakdown was helpful, and drop a comment below. What stock do you think I should look at next? I read every comment. If you want to run the same screen, I use TipRanks for the Smart Score and Top Analyst Consensus, and Simply Wall Street for the Snowflake check. Both are linked in the description below. These are affiliate links, which means I may earn a small commission if you sign up at no extra cost to you. They don't influence which stocks I pick. The methodology does that. Quick reminder, everything here is for education and entertainment only, not financial advice. This is my personal real money experiment. I'm not a licensed advisor. Do your own research or talk to a licensed professional before making any investment decisions. Have a good day. See you next time.